Welcome back to Fast Money. We've got some crypto news for you. The latest Bank of America fund manager survey showing long Bitcoin is the most crowded trade in the world, the whole entire world. The survey also notes the most crowded trade distinction has historically signaled a relative top. It points to the tech trade in September 2018 and 2020, the U.S. dollar in February 2015 and January 2017. So, Karen, what do you make of this, that fund managers perceive something to be a crowded trade?
Right. Well, I wondered, did this come out April 14th? Because that was sort of the peak. I mean, it's down, I don't know, Bitcoin's down 2,000 since then. I've never quite understood what crowded means, or it's over-owned. I don't really get what that means. There's a shareholder, I mean, there's, a number of Bitcoin, 18 million, and there's always a number of shareholders who own it. But if you want to say the momentum traders, I guess, the hedge funds, yeah, I believe it's overcrowded. I don't think that trading around whether it's overcrowded or not is really part of the fundamental story of Bitcoin. We know how volatile it is. We've seen drawdowns of bigger than this many, many times before. The question is, do you still believe in the theory behind Bitcoin? I actually do. I'm long. I've been long for a long time, that and a number of other currencies. So I guess I'm in the overcrowded trade of the world.
Karen, in a momentum trade. Yep. Remember the chart master was on yesterday saying that the average drawdown on Bitcoin is 55%. I think it was 55. It was somewhere in the 50s for sure percent, and we're sort of just in the middle of that at this point, Tim. So what do you think of Bitcoin here?
Well, the term was garden variety, I believe.
Garden variety, yes.
We're somewhere, and I think BK has pointed out some of these drawdowns, and you've maintained bull market status. Look, the move to an institutional base, the growing prevalence of ETF products that can have exposure to it, the sense that of FOMO that actually, ironically, Wall Street went through after non-Wall Street players in crypto had been alive and well for 5 years. So. Yes, I think the fund manager survey, by the way, I love Bank of America's work here. I think it's very interesting stuff. I think in the case of crypto, I think you may have a slightly different dynamic. And look, we've already taken a lot of that froth off.
All right. We've got a news alert here on Squarespace, the website hosting company setting the reference price for its direct listing at $50 a share. So we will be watching that for tomorrow. Squarespace. Stan, what do you make of this?
Well, I think it's interesting. If I go back and look at the last three big ones, direct listings in tech, Coinbase, Spotify, and Slack, all of them traded to that reference point at some point and went lower. Coinbase, reference point, not that it's so important, was $250, traded as high as $420, now closed today at $239. All of them within months traded below those levels. So, and we also know that high valuation tech names are not trading particularly well, the ones that went public in the last 6 months. So, to me, you got to see how it trades. You got to see what this kind of supply is going to be on the direct listing, because a lot more share, the ability to be sold right away on that listing.
Yeah, and they can still raise money afterwards, by the way, even after they go public, as we saw with Coinbase yesterday. So don't think you're immune from that.
Shepard Smith here. Thanks for watching CNBC on YouTube.